Unlock Hidden Wealth. Podcast episode 19, the strategic reverse mortgage line of credit. Welcome back to Retirement Solutions for All Ages. I'm your host, Ruth, the retirement mortgage expert at Nexa Mortgage. In our last episode, we talked about why traditional mortgages and constant refinancing can feel like a maze, often benefiting the banks more than the homeowner. Today, I want to introduce you to another way to think about your home's value, particularly as you approach or are in retirement. We're going to explore a strategic approach to a reverse mortgage, specifically focusing on its increasing line of credit feature, and why, for some, paying closing costs and that upfront 2% mortgage insurance premium, even when you don't need to borrow money, can be a brilliant financial move. This might sound counterintuitive at first, but it's about unlocking and protecting the wealth tied up in your home, providing unparalleled liquidity and peace of mind. It's a strategy I'm truly passionate about, and I've seen it played out in real life, even in my own backyard. Let's dive in and discover how to truly make your home a powerhouse for your retirement. Let's imagine you're 62 years old or older and you own your home, perhaps even free and clear. You might not need cash right now, but you understand the importance of liquidity, having access to funds for emergencies, unexpected expenses, or even future opportunities. This is where the increasing line of credit feature of a reverse mortgage becomes incredibly powerful. You take out a reverse mortgage, even if you don't draw any money out immediately, a portion of the loan proceeds can be set up as an increasing line of credit. This line of credit actually grows over time, tax-free, I'm not an accountant, regardless of what the housing market does. Think of it as a growing reserve of accessible funds. You don't make monthly payments on it, and you only accrue interest on money that you actually borrow. Now, let's look at the upfront costs of the closing costs and the 2% FHA mortgage insurance premium. It might seem like a lot of money to pay when you don't need funds immediately. However, consider that the 2% insurance locks in the value of the home for the purpose of the reverse mortgage line of credit. This means that if your home's value were to drop in the future, the amount of your available line of credit doesn't decrease. It maintains its growth potential based on the initial appraised value and interest accrual, providing a protected pool of funds. It's like an insurance policy for your home equity. I saw this play out in a very real and dramatic way with my own home in Marco Island. Let me take you back to the week of the pandemic shutdown. Early 2020, our home was appraised at $600,000. That was actually less than what we paid for it in 2015, even with all the improvements we made. It felt like a paper loss. And like many homeowners, we watched the market with bated breath. Then came the buying frenzy, driven by low interest rates and the sudden need for larger homes with office space for remote work. The value of our Marco Island home soared. At the height of the market, Our home was valued at $1.5 million. Think about that jump from 600,000 to 1.5 million. By the time we eventually decided to sell, the market had cooled down a bit and the home was worth around 1.1 million. Well, that was still a fantastic gain from our purchase price. It was a paper loss of 400,000 from the peak of the market. Now, here's the powerful insight. If you had been 62 years old and taken out a reverse mortgage with an increasing line of credit at the height of the market when the home was worth 1.5 million, that initial 2% FHA mortgage insurance premium would have been a bargain. It would have locked in our ability to access an increasing line of credit based on that $1.5 million value, not the 600,000 from before the frenzy or the 1.1 million when we eventually sold. That line of credit would have continued to grow based on the higher locked-in value, providing immense liquidity and financial flexibility, regardless of subsequent market fluctuations. But what if you took out a reverse mortgage when your home was only at the $600,000 value and then later appreciated to 1.5 million like mine did? The good news is, just like with a traditional mortgage, you can refinance a reverse mortgage. If your home's value significantly increases, or if market conditions for reverse mortgages become more favorable, higher interest rates can sometimes allow for a
larger percentage than your line of credit increases by.
You can refinance your existing reverse mortgage. This allows you to reset your loan based on the new, higher appraised value. You'd pay new closing costs and more mortgage insurance premium based on the difference in value, but it would give you access to substantially larger line of credit, increasing your overall liquidity and providing even greater financial power. This strategy ensures that your reverse mortgage remains a dynamic financial tool, adapting to the changes in your home's value and your financial needs over time. It's about being proactive and ensuring your wealth is always working for you. The increasing line of credit feature of a reverse mortgage is more than just a convenience. It's a strategic financial instrument. It offers powerful liquidity and helps you protect your home's value, allowing you to access funds as needed, tax-free and without monthly mortgage payments. For homeowners 62 and older, especially those with substantial home equity, it's a conversation worth having. If you're interested in exploring how an increasing line of credit could enhance your financial security, or if you're just curious about refinancing an existing reverse mortgage to leverage increased home value, let's connect. You can reach me directly by phone at 828-888-LOAN. That's 828-888-LOAN. Or you can email me at ruth@nexamortgage.com. Thanks for joining me on Retirement Solutions for All Ages. If this episode sparked new insights for you, please leave us a review, share it with a friend who might benefit from these strategies, and hit that subscribe button so you don't miss future insights. Until next time, I'm Ruth, the retirement mortgage expert, helping you unlock the hidden wealth in your home.